Hi, this is P R Sundar. Welcome to this special episode where I am going to talk about earnings trade. You must have heard people talking earnings trade. So what is it? One day before the results or on the day of the results, people take some position expecting to make some profit. So that's what I am going to explain today. So first let me explain what is a straddle. Selling at the money call and selling at the money put, both at the same time, that is called short straddle, or buying at the money call and buying at the money put, both buying at the same time, it's called long straddle. So taking a trade at the money call as well as put is called straddle, and if you are selling it, it is called short straddle. If you are buying it, it's called long straddle. So when are you supposed to do short straddle? When are you supposed to do long straddle? So that's what I'm trying to explain in this video. So first, what is earnings trade? And this video is being shot on Thursday, 12th of October. And yesterday evening, the TCS results came. That came after the market hours. So market will be reacting to the results only today. So what some people would have done yesterday, so they would have taken some position. People who are thinking that TCS is not likely to move significantly higher or lower, and they will be doing a short straddle. And people who think market will be moving violently, TCS shares will be moving violently on any side, and they will be doing long straddle. So what is the risk and what is the reward? So that's what I'm going to explain. And look here, I'm showing you the TCS share price. The results seems to be not really so good. The share price has fallen about 67 rupees, and today it closed around 3543. The previous day closed, that is yesterday close. So yesterday it was 3610 nearby, and today it has fallen 67 rupees. But despite 67 rupees fall, that is nearly 2% fall, the people who have taken long straddle would have lost the money. Long straddle means those people who bought at the money call as well as at the money put. They would have lost the money. How much they would have lost, I will explain a little later. Despite market falling 2%, how come these people are not making profit? So that is because, a stock is expected to move by certain percentage point after the results. In case of TCS, it was nearly 4%. The market expected to TCS move 4%, and that is already been factored in. So long straddle people will make money only if it moves more than 4%. Not necessarily exactly more than 4%, because the option prices also include the time value, so there is still some time. But more or less we can say TCS has to move more than 4% for option buyer to make money, and anything less than that, option seller make the money. I'll just show you the option chain here. This is the TCS option chain. So TCS has fallen about 2%, and yesterday it was around 3610. So that means people would have done 3600 call and put. And see the option chain, what happened. If anyone has sold both call and put, that is a short straddle, what would have happened? So there is an increase of 27 rupees in the put option, which means that the seller would have lost 27 rupees. And call option fell by about 50 rupees. So that means he would have made 50 rupees profit. So 50 rupees profit in the call side, 27 rupees loss in the put side. So on a net to net basis, still he will be making about 23 rupees profit. I think the 23 rupees profit will translate into how much? Lot size is 175. So that's close to 2000 plus rupees per lot. I think the margin money, I'm not very sure. So maybe margin money may be around 1 lakh rupees if we assume, or 1.5 lakh we assume. So getting 2000 plus profit is more than 1.5% in just one trading session. So this is how option sellers will do. Now, if you see today, after increasing 27 rupees, now it is about 80 rupees. Now if you see the price now here, it is about 90 rupees on the put side, 30 rupees in the call side. So 30 plus 90 is about 120. Plus there is a loss of 23 rupees. If you add that, that happened to be around 145. So yesterday the combined premium was about 145 and today the combined premium is about 120. So that is where the remaining 25 rupees has become profit for the option seller. Now 145 rupees is the premium for a stock that is trading around 3600. So that works out to be 4%. The total premium works out to be 4% of the share price of TCS. So then the people say TCS is likely to move 4% up or down. Or we can say 4% of the move is already been factored in. Buyer will make money only if the stock price moves even more than 4%. So otherwise they will be losing. So when you will be making profit, so you just look at the at the money straddle premium, see what is the percentage. If you think that the stock is not likely to move more than that, then you should be a seller. You must be a short straddle person. But if you think that the price will move much more than that, then you should be a buyer or long straddle. This is the example of TCS I have given because the result is out already. But today's trading session, we will look at Infosys around closing time. But the Infosys result has also come, but it came after the market hours. So if you look at the Infosys, so Infosys closed around 1450 today. And then if you look at the 1450 call and put, 1450 put is about 40 rupees and call is also about 40 rupees. So 40 plus 40 is around 80 rupees premium. And if 80 rupees is the premium, the stock price is about 1450. So that works out to be how much? About more than 5%, 5.5%. Just ahead of the results, so Infosys at the money call and put both together, the premium works out to be around 5.5%, which means that Infosys is likely to move 5.5% up or down, or a 5.5% move has already been factored in the prices. So which means that the stock has to move more than 5.5% tomorrow for the option buyer to make money, whereas option seller will make money if it moves only 2 to 3%. Maybe we will check right now. Now the time is 5 p.m. Right now I am checking the Infosys ADR. Of course, Infosys is not trading in India at this time, but in US market it is trading. So Infosys ADR is down by about 2.6%. But it is down by 2.6%, but it is already down during our market. So Infosys is down already by how much? Yeah, by 2.82%. Now US ADR is also down. So which means that Infosys is likely to be flat. But again, this US ADR price may change, and so there can be n number of things that can change from now to tomorrow morning. But by looking at this, it looks like tomorrow, that is on Friday, option sellers will be making some profit, not the option buyer. Then why people want to do just one day before the results? That's because there will be a lot of people will be thinking their corporate results will be very good, market will shoot up, so they will go and pay high premium to buy the call option, and vice versa. There are people who are very, very bearish about this company, so they will be buying the put option by paying a huge premium. So because of this expectation, the premiums shoots up. So that's called, they call it as IV shooter. After the results, people will know more or less where the price is headed. So that IV will come down. That is called IV crush. So option sellers mostly go for IV crush. I hope you learned what is short straddle, what is long straddle, when to do short straddle, when to do long straddle. So what are the plus and minus, and how much the price has to move in order for you to make profit. In my next video, maybe I'll come out with some strategies where you can make some money, and if you are a long-term investor. I hope you enjoyed watching this video. Thank you for watching.